Good morning. It's nice to see everyone. My name is Andrew Dailey. I'm a semi-reformed industry analyst, and hopefully we'll share a few insights with you guys today. I know I'm between you and lunch and two terrific sessions that are immediately after lunch, so I'll try to be as quick and brief and hopefully insightful as possible. Let me see if I can get this to work. So how did somebody end up in the billing space and usage billing in particular? And it kind of talks to who we are as MGI Research. So I started MGI Research with two partners in 2008. Collectively, the three of us, one of us was involved in coming up with a concept and coining the term of ERP, or Enterprise Resource Planning. Another person on the team was on the banking team that took Apple public and then developed the sell-side research coverage in software at Morgan Stanley. Another one of the partners started the security practice at Gartner and ended up running about a third of their research business. That's one way of saying we've been in this business a long time, longer than we should admit. The reason we love billing, how did we end up in billing? We got into billing by accident, and we love this space. Why is that? Billing is that one area where you may or may not touch a customer during the course of a month or even a year. But what's the one thing you'll do? You'll send them a bill. And in that moment, there's an opportunity to denigrate the relationship, confuse the customer, right? Spoil your opportunity to sell more into that account. Or it's an opportunity to be transparent, easy to understand, right? Build brand confidence and trust in what you're selling. So it's that one moment where people think about billing as this back office, like out in the boonies kind of function, when in fact, we would argue it's at the core of the customer experience, because you are going to bill customers, and that's the one opportunity to be accurate, transparent, and on the money, so to speak. So we love this space. We also happen to see, as you'll see, it's pretty critical to business overall. Here's what I'm going to run through in 16 minutes. I'll talk about the macroeconomic picture. So Ryan had asked to talk about that. We typically do this on an annual basis. Of course, this is a particularly difficult time coming off of an election last week. If anybody can predict what's going to happen, I'd like to know. But I'll lay out some different scenarios and how to think about that. More importantly, I think I'll talk about what are the underlying factors that are driving the economy, innovation, et cetera, and that kind of helps inform different scenarios and the probabilities of those things playing out. I'll talk a little bit about AI, because what event can you not be at and talk about AI, where we are with that. Then I'll finish by talking about how we see kind of quote to cash, or as we think of it, the prospect to disclosure cycle, how we see that evolving and changing over the next few years. So with that, the macro picture is pretty mixed, right? Fortunately, when I was putting these together, nobody knew what the outcome of the US election was going to be. We got a very clear result in the US. As a consequence, the uncertainty that was in the equity markets and debt markets has been lifted. That's why you saw such a huge rush in the market in the last week. It had nothing to do with who won or who lost. It had everything to do with the fact that there was a clear and certain outcome, and it was decided in 24 hours, right? So the markets could shift, soon, and they're already beginning to signal things. It's unclear what's going to happen with the Federal Reserve. There's a lot of talk about that. Clearly, there's going to be continued pressure on the Fed to continue to kind of address inflation, right? That's going to persist. We have a couple hot wars going on in the world. There could be more if you think about China, Taiwan. So that increases the uncertainty in the outlook. The supply chain disruptions that took place, I would point you to, there's a software company called Descartes Systems. It's actually a Canadian company. Adam's nodding. Stock has done incredibly well. They publish really good data on what's going on in the world of supply chain and logistics and the movement of goods and services around the world. And if you go through what they're talking about and have been talking about, is the supply chain disruptions continue to this day. And if you think about the wars that are going on and the uncertainty, those disruptions will likely continue at least for the next, let's say, 12 to 24 months. The other thing you think about, like what's having a big impact on technology, it's AI. It's really interesting. If you go back a couple weeks, whatever, about a month ago, you had Workday having their annual conference, Rising, taking place the very same week that Salesforce was having Dreamforce here in San Francisco. And literally in the same day, you had Anil Bhusri and Cheyenne, their CTO at Workday, who are two extremely experienced, very wealthy individuals who've had success with multiple companies, on stage basically saying AI is going to, is well into the trough of disillusionment, and it's unclear in terms of what the value is going to be. And I think the panel talked about it earlier this morning, like where's the money going to come to pay for AI innovations? And at exactly the same time, you had Mark Benioff on stage saying AI is going to change the world and everybody's going to pay $2 in agent interaction. Also, if you go back to our panel this morning, you say, where are those $2 per agent interaction going to come from? It's a very open question. The other issue around AI is, where's the power going to come from for this? And if you think about the fact that Microsoft is engaging with 3 Mile Island to restart a nuclear power plant, gives you a sense of the scope and scale of the problem to power AI models. And if anybody that reads the Financial Times, earlier this week there was a front page article on a guy named Don Wilson. You've never heard of him. He's a trader in Chicago who's built a multi-billion-dollar business on his own with no outside money, no outside investors. And he is betting that actually compute and the power to power compute is actually going to be a bigger commodity than what you see in the oil business today. Think about that for 1 minute, right? So that could be, we're always looking for what are the things that could derail key trends in the industry. So when the cloud came along, we were interviewing everybody saying, what could throw this thing out, right? Could there be a huge breach that suddenly would stop people from going to the public cloud, right? Clearly, that didn't happen in terms of it being derailed. Could power, the cost of power, the need for power, be the thing that derails the seeming march towards AI? So here are the economic scenarios. As an analyst, you always like to take a victory lap when you can. It doesn't always happen that often, so here it is. This is from March 2023, where you had inflation somewhere in the mid-single digits, like 6-7% at that time. Economic growth was in the low single digits, right around 2%. And we basically said our view last year in March was that inflation was going to moderate, growth was also going to moderate a bit, and we put together some different scenarios with probabilities, which is how we like to think about things. If you take a look at where are we today, surprisingly, if you look at the last print of GDP growth, growth has actually gone up in the US. And if you look at the inflation print today, literally today, this morning, you see that inflation has ticked up slightly, roughly at between 2.6 and 3% of inflation. Our view, where are we going to be? Our view is that growth could actually stay the same. Potentially, one scenario is that GDP growth in the U.S. could increase. The indicator for that, what would lead that to happen, would be a reduction in the regulatory environment. You could also see a lot more M&A activity as companies are no longer concerned about intervention from the FTC, and that could help spur economic growth. You could see a reduction in spending overseas that would also help drive potentially US economic growth. So those are things that could potentially drive it higher in the short to midterm. What could drive it down? The US consumer, number one. So there are different views on, are people out of money yet or not? If you look at it from a pretty high level, you'd say that the US consumer is actually very healthy today. A bigger concern for US and North American GDP growth is actually internationally. You look at the European economies, look at Germany as an example, it's a basket case, both politically and economically, on the edge of or in recession at the moment. You look at the UK and England, also not a great economic picture right now. And then you say, what are the effects of tariffs going to be on trade? Historically, without taking any political view, historically, protectionist kind of mercantile economic policies have always led to inflation and reduced economic growth. So if we see a big swing towards, a lot of tariff activity and kind of that mercantile type of approach, we're probably going to see inflation come at some point thereafter, right? So that's how we see things. If you look at the cross currents, we think interest rates probably going to stay higher for longer. This notion or belief in the markets, interest rates are going to come down consistently. Our view, somewhat against conventional wisdom, is that actually we're going to see interest rates stay where they are, maybe even tick up. That's one important thing. The second thing driving growth, and in particular tech companies, access to capital. Our view is that that's going to loosen up as we go into 2025. We're going to see more major M&A activity. One key thing to look at is what's the actual real cost of borrowing in tech deals. And if you look at that today, go look at, we're just going through the proxies for Smartsheet as an example of a recent deal. There's a company that's now loaded with debt, and they're paying somewhere north of 10% for the privilege to borrow that money. From a customer point of view, that means that there's roughly $400 million that Smartsheet doesn't have to invest in innovation for you as a customer, right? So a lot of these deals from this year with high borrowing costs, you're going to see a lot less innovation coming out of those companies. It's just the reality of it. Cost of energy, very interesting. You saw Israel attack Iran. What happened to the cost of oil? Didn't do a thing, right? You would have thought you'd see a spike in the price of oil. That didn't happen. So that basically says the energy markets are pricing in the fact that there won't be so much turbulence in the Middle East, or at least it won't have as big of an impact on the price of oil. I'll touch on maybe one thing here. What's one long-term durable trend that's not tied to the economy today? It's demographics. Right? The demographic, the aging out of the North American and European populations, the Japanese population, that is on a track and going. And what that means is, for anybody that's in the software business, really good news. Because companies are going to have to invest in productivity enhancing tools. And that's spelled software. Right? So if you think about the next 5 years, companies are going to, whether it's through AI or anything else, companies are going to have to continue to invest in productivity tools, and that's spelled software. If you look at business applications growth, another interesting area, probably going to continue to grow above GDP growth rates, as that is a continued area of focus of ROI for companies. Okay, let's talk a minute about AI. Our general view with AI today is try everything, trust nothing. And the real question is going to be, when do you start to see the use cases? And I think Tony earlier this morning talked about it. When are we going to see use cases that deliver real, tangible, differentiated business value? And it doesn't take a rocket surgeon, as we like to say, right, to figure this out, which is look at where all the technology companies are, especially in the application space, in terms of bringing AI into their core applications. Everybody's at that initial stage of let's go find a handful of beta customers to bring our AI innovations into the market. So put that on a time scale. That's going to take 6 to 12 months for that to all work through. You're then going to see a lot more mainstream products coming to market in the next 12 plus months. So then you have to say, am I like at the bleeding edge and I want to be, in the beta groups? Do I want to like wait a little bit, see how it plays out? Right? That's a question for every organization to ask. And also within the organization, where does it make sense to invest? It's also very interesting to see who's going to pay for this. Again, going back to my example of Workday and Salesforce, Workday looks at it and says, we're going to provide innovation as part of what people are paying us a lot of money to provide for HCM and financials and planning applications, right? So they're saying they're not going to charge extra for anything in AI. If you look at what Salesforce is doing, Salesforce has basically repackaged existing technology in a very clever way and said, we're going to sell that to you all over again for a lot more money. They're saying it's $2 in interaction. Maybe on a good day they'll get 2 to 5 cents in interaction. Maybe. I think that's going to be highly negotiated and depend on the size of the organization. But that's the question is, where is the budget going to come from and what are the use cases that show clear differentiated value? Since it's budgeting time, this time of year, for a lot of organizations, we get a lot of inquiries about help us work through our budgets, how can we find savings, and what should we be thinking about or planning in terms of 2025 budgeting. And there's always the issue in a lot of companies that comes up, which is, hey, our board or CEO thinks, or CFO thinks we should look at this in terms of what's our IT spend as a percentage of revenues. Think about that for a minute as just a metric of inputs into your business and how you measure things. And then think about the best companies in most industries and how they think about IT spending. So if you take JP Morgan Chase as a leader in the financial services sector, how much do they spend on IT? Anybody? Let me flip it around. Who spends more on technology innovation? Salesforce or JP Morgan Chase? JP Morgan Chase by a lot, right? They're spending in excess of 15% of 100 billion plus in revenues on technology innovation. The real question to look at it is say, what do we get for the spend? And that's what this model tries to do and how we try to work with clients is say, you can look at it and say, do we want to be the most efficient IT spender, or do we want to look at it in terms of efficacy of spend? Take Goldman Sachs as an example. Do they look at the line item for what they spend in software? Of course they do, but what do they really look at? What's the output at the end of the year, right? Did trading revenues go up, down? Did we increase assets under management, et cetera? So what we're simply saying here is, instead of looking at it as it's a cost of revenue as one metric, throw that to the side and say, what do we want as an organization to achieve? Do we want to be hyper efficient with our spend, or do we want to be super effective with the outcomes that get delivered with that spend? And then, of course, you can pull apart a portfolio and say, let's look at certain things that should be in the efficiency category versus the effectiveness category. You can go into that in more detail. I talked at the beginning about a lot of the change and disruption that's taking place in kind of the macro picture, right? It's an uncertain picture, right? What's going to happen in the US? How's the administration really going to manage? What's going to happen in Europe? What happens more broadly around the world? If you think about it, what it really means is organizations are going to need to be more and more agile, and there will be a competitive pressure, persistent pressure to get to market faster, because windows are shortening, right? Windows of opportunity get shorter and shorter and shorter. So the question is, as an organization, how can you shrink the time cost envelope for bringing new product, new innovation to the market to differentiate and build competitive moats? Our view, and this is not a difficult thing, is to say basically we're going to see this continued pressure, 40, 50+% shrinkage in the time cost envelope over the next 5 years. Another way to think about this is, how long does it take an organization to get things done? How long does it take to get things done? And you can plot this and say, let's look at the organizations that are super high velocity companies, and you can take that across a lot of different metrics. What's the time to onboard a new employee? Is it less than a day? Is it a couple weeks? What's the time to close the books? Can it be done basically in real time or very quick time, where basically the CEO, the board know what the numbers are going to be, plus or minus 2 or 3%, immediately at the close of the quarter? Or is it going to take a week, 2 weeks, or longer? Right? So you can go through a lot of these metrics and say, what's the speed? What's our ability? What's our GSD quotient? And how fast are we? And then also decide, where do you want to be, in terms of being a leader in that, laggard, and where in the organization do you want to accelerate the velocity of getting things done in the business? Usage billing. Since we're doing kind of this tour of horizon talk, what's really driving the adoption of usage billing? It's a handful of things. A number of them we talked about, Adam and others talked about earlier. This is some of the things on our list. One, it's an opportunity to expand the total addressable market for a product, service, or company, right? How do you reach a new segment of the market? How do you reach customers in a more frictionless way, right? Faster on-ramp to those customers. It's a way of communicating value, pay for what you get, right? It's also a way to do price discovery. And if you think about the AI companies that are coming out with usage-based models, we would argue that it's not anything inherent in the usage-based model and the specialty to AI. It's just simply the fact that here's a set of companies that are trying to figure out what's the value of what they're trying to deliver, because they don't know yet. So this is the easiest way to try to figure that out. Over time, what do customers want? What does every CIO, software procurement manager really want? What does every CFO want? Budget predictability, right? Having been, like, I started Gartner's software asset management service in '92. Having done surveys in this space for years and years and years. Price at the top of every survey, like what do buyers want in software? Price is rarely in the top 5. Number 1, perennial winner, budget predictability, right? It could be $5, it could be $5 million. I don't get fired if it's $5 or $5 million. I get fired if it's more than what I told everybody it was going to be. So ultimately, our view in usage billing is that it's a terrific model. Enter new markets, do price discovery, provide more flexibility, provide a more frictionless experience. Ultimately, it ends up being a part of a panoply of different options that you want to provide to customers. but it's a very important one because the companies that don't have it, and I'll go back to Adam's comments about subscriptions. There was an article, if anybody saw it in the Wall Street Journal this week, that talked about the amount of churn in the streaming services and how many second and third time customers, or how many customers had stopped the service and then resubscribed, right? And it's somewhere between 10 and 30% of the streaming services. So think about what the cost to serve when you have customers signing up, stopping, signing up again, and what kind of customer experience that is, versus saying, hey, let's price a la carte, pay me for one, download now, and then pay as you go. Right? So it's an important piece to have that ability. And a lot of those organizations that entered the streaming market, a lot of them spent a lot of money, hundreds of millions of dollars. Many of them built their own billing systems. And what did they not do? Plan for an evolution in their pricing plans, which is why you're seeing these issues in like the desire for usage billing, and why they're struggling to monetize in the advertising space. Some of them are doing it better than others. Take Amazon, right, doing it better than others, and you look at some others totally struggling to monetize in the ad space because they hadn't really thought about that shift from a subscription to some other monetization ability. The usage billing challenges, ultimately, we believe it comes down to the customer's lack of predictability and the need for companies that are selling some type of usage or consumption model to have to communicate in a different way with customers. That's the hardest part. It's a tremendous tool, but it also comes with the need to change the sales and marketing motion that comes with it. And there's some other technical challenges, which I'll talk about in 1 second. A lot of companies have come into the usage billing market over the last, let's say, 5 years. But if you lay it out, just as you see it here, you can lay out different types of usage and consumption monetization models, and they can go from very simple to hyper complex. Right? A number of organizations in this room, you have very complex monetization models where usage is just one piece of a sophisticated enterprise engagement with your customers. The same thing is true with the tooling behind it. You have the organizations that really understand the hyperscale environments with a lot of business complexity, and then the tools that have come into the market, a lot of them more recently, who really don't understand the problems that they're going to run into this year, next year, and in the future. So there's a big spectrum of tools that are out there, and more importantly, there's a very limited amount of domain expertise in the market today. That's the biggest challenge. If you said, who could go write a hyperscale usage billing system today, you could fit the number of people who could develop that in this room. That's the challenge for companies coming into the market. There's just not enough people that really understand the problem at scale. The other key piece, and this, like companies come to us, usage billing companies, every 2 to 3 weeks there's a new company coming to us saying, hey, we got this new tool, come evaluate us. The first question is, do they understand mediation? And you either know mediation or you don't know mediation. It's the immediate litmus test. And how well do they understand and know it? And if they understand and know it well, they know that it's very difficult. It's not easy. The good news is there's been a lot of innovation in this space. Logicent's been doing a lot here, but other companies as well. And that's going to lift everyone in this space. The other thing that's happening is you're seeing the large financials vendors, Workday, SAP, to name names, who are recognizing you need a mediation tool to run a sophisticated finance operation. Not just for billing, but for everything else in the finance organization. So that's also going to bring more innovation into this space around mediation, which is good. We would say that's good for everyone. Okay, about, don't quote me on this, about 10, 12 years ago, we came up with this concept of an agile monetization platform, right? Because everything in the research business has got to be a TLA or a 3-letter acronym. So you said, hey, AMP, right? That works. But basically said, what if you could throw everything out and start from scratch and say, let's engineer our quote to cash, or like I said, we stepped back from that and said, let's engineer the prospecting to disclosure processes completely anew and not look at the tools that are out there, again, this is 10 years ago, and say, let's look at how would you do this today, right? Like nobody would build email today, right? Why would you have a store and forward mechanism? You'd have something like Slack, right? So similarly we said, let's rethink this whole area and what are the component pieces that you'd want to bring into this and connect it all together. And so this is basically a reference architecture. It's one way to think about it, just as ERP is a reference architecture. So one way to think about going into an organization and saying, let's benchmark how well we're doing and where we're investing in different areas of our ability to monetize, and then figure out, are we keeping pace with what others are doing? Is this where we want to be in terms of an effectiveness versus efficiency kind of point of view, right? And say, are there any gaps? High-end usage billing for a lot of companies, typically mainstream companies, like it's a big gap, right? They don't have that capability. They're going to need to get there to be competitive and close that time to market gap. Contract management is another one of those spaces where a lot of companies thought, okay, we can do e-signature, we basically have a basic repository, that's enough. Again, step back from it and say, what are the most important parts of your business and where do they live? My customer data is in contracts. My financial data is tied to those contracts. My intellectual property is tied to contracts, and all my human capital is tied into an employment agreement. And then you say, where is that? And for a lot of organizations, that's a difficult challenge to go figure out and go find that stuff. So that's one of those areas where we said, well, let's dig deeper into that, and you'd say, oh, there's probably a way where you could take like a data-first kind of fresh approach to contract management and rethink that whole space. And that's just one piece of this overall kind of reference architecture. What we're seeing in the market is more and more software providers in the market are providing more and more of these capabilities. Very uneven, right, in terms of the modernity of their solutions, how well it's stitched together. But ultimately, you're going to see more of these pieces coming as a single package. Right? If you take Stripe at the low end, they're trying to buy a handful of things, stitch it together. You got a whole bunch of startups that are saying, hey, we'll do some basic quoting, we'll do some basic billing, and we'll stitch that together with some revenue recognition. So the long-term view, though, is there's going to be more happening more broadly across the space as opposed to these just being an isolated niche or individual piece of functionality. So that's my story. I'm sticking to it. If there are any questions, I'm happy to take any questions. Yes, sir.
Your overview of the potential of economic future. You didn't mention climate or the mass deportation. If you consider them trivial or just I know you're limited in time, so I'm just curious whether either of those factors you've considered and their impact.
Yeah, very good question. So I'll just repeat it. The question is, we didn't include in the macroeconomic outlook the impact of climate or mass deportations. I never thought I'd be on stage talking about mass deportations, but thank you. In my life. Full disclosure, I'm a co-founder of a company called Climate Vault that I started with a friend at the University of Chicago that's very active in the climate space, helping people with reducing their CO2 emissions and actually funding innovation in that space. So I have a dog in that race. And I would say that, look, climate change is happening. I think that's pretty widely accepted as scientific doctrinaire. And there's a price attached to that. And we can figure out whether we want to expose that cost directly or not. There's been a lot of work done in terms of putting a number on the social cost of carbon, which my co-founder in that company has done. His name is Michael Greenstone at Chicago. So you can put a number on it, you can start to price this stuff up. If you look at what happened at the COP event, there is a shift towards a global carbon market. That would be a really good thing. We'll see the details of it. So that's going to be a cost of doing business, and it's going to affect technology because the AI world is an enormous consumer of power. So it absolutely has an effect. Will mass deportations have an effect on the economy? I have no idea and don't want to touch that.
Just to build on that climate change thing, you would think that usage-based pricing or usage economy as well as dynamic pricing is an accelerator of usage pricing, would aid in sustainability and carbon emissions in terms of being more efficient across the value chain. Do you agree? Do you disagree with that?
Yeah, so a question is, if I can remember this, I have a very short attention span. Me build wall is how I think about things. The question is, will usage models help reduce or ameliorate the issue around climate change and people taking action around that? The biggest issue is companies today haven't priced the impact of their emissions into their business. So the ultimate question is who pays for this? And there's been a lot of great technologies that have come and gone because nobody in a supply chain can figure out where the cost should sit. Right? Think about RFID. That took decades to find a niche market, basically. And why is it? Because nobody wanted to pay for it. So similarly, I think the challenge in climate is who's going to pay for it? Is the consumer going to pay for it? Are you going to push it down through your supply chain? And today, there's no budget item for this. So people do it outside of any regulatory constraint or demand being put on the business. And it comes and goes in terms of consumer intent putting pressure. So could usage models help? Yeah, absolutely. But hey, there's a carbon market in California today. You can go out and buy a ton of CO2 this afternoon. Does that mean everybody's doing it and offsetting their footprint? No. Super easy, right? You could offset your life for $200 a year. Going once, going twice, I bid you good lunch.